Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. This week, we're doing something unique with the podcast, and then I'm offering a series of interview previews for interviews that will take place in the DIY Investing Summit next week, which begins Monday, January 23rd. And the summit is being put on in partnership between Seeking Alpha and Investor in the Family, and each one of these interview previews stands alone in its value, but it gives you a glimpse of what the rest of the interview may be like, as well as the rest of the summit, which overall has 25 interviews from some of the top investors from Seeking Alpha. Registration for the summit is free for a limited time, so be sure and check it out at DIYinvestingsummit.com. That's DIYinvestingsummit.com, or you can check out any of the links in the show notes or the article. I hope you enjoy this interview preview with Mark Bern. I will note there is some background noise in this interview, and we've done the best we can to reduce and even eliminate that noise. In any event, I believe the contribution from Mark in this interview by far outweighs some of the sound blemishes, and so I hope you enjoy this clip and the broader interview with Mark Bern. Tell me this, so how are you positioning yourself for the start of 2017? What are you excited about? What has you concerned?
Well, obviously I'm going to be fully hedged before Christmas, for at least with most of my expirations going out 6 or 8 months. I'll be looking at trying to add new positions to hedge further, like out to January of 2018, whenever the pricing, the premiums get to a level that I like. I'm positioning for, and of course I put on some positions back a few months ago that expire in March, April, May, and they're underwater now, but I expect them. I really do think that some of those will show some gains before it's over. So I'm not adding new positions at this point. But I hope that in 2017 gives me an opportunity to do so. But I won't do so until things get what I consider to be cheap. And most of what I buy is almost all of what I buy is exclusively dividend paying stocks. So I use the DDM, the dividend discount model, and that's as my primary method of valuation. I also use a free cash flow as a check, and I also look at PEs. But when things get what I consider cheap on a valuation basis, then I'll start buying. But if things get out of hand, in other words, it turns from a correction to a crash, I'll wait till I see certain. Well, there'll be some things I'll watch for, and I'll explain those later.
Right. Well, tell me this.
Some notes myself.
Yeah. Real quick, you said you'll add new hedges out to January 18 when premiums get the good levels. How do you go about determining whether or not options are at good levels? Like, how do you gauge that?
I build a little spreadsheet model that I run everything through, and I want to be out of the money, but at a point where I can get that a good enough gain relative to cost. So it's really the effective cost that I look at. In other words, the percent of my portfolio that it will cost me to put on that hedge. I don't want to spend more than 25 basis points on a hedge position generally, because in total, I'm looking for something under 2%, preferably 1.5% in aggregate. So if you add eight of those together, you got to stay really under 2% or 20 basis points on each one to stay under 1.6% or thereabouts. The ones I've recommended recently, I think for 8 positions, it's generally going to be about 1.8%. So I try to keep it under 2% for each hedge for the positions that I'm hedging. And that may not be for a full year. I like it to be for a full year, but it may be 6 or 8 months out. 9 months out. 6 to 9 months is generally how far I go out. But if I can go out a year and still lock in a good hedge protection at that same cost level, then I'll do that. Does that make any sense?
No, it does make sense, and that is helpful. I hope you enjoyed this excerpt from the DIY Investing Summit. If you want to hear the rest of the interview and the other 24 interviews from the summit, be sure and visit DIYinvestingsummit.com. That's DIYinvestingsummit.com, or you can click any of the links in the article or show notes to this episode, and it'll take you straight to the registration page. And remember, the summit begins Monday, January 23rd. You can still register after that, but you'll miss some of the content. So register by Monday, January 23rd at DIYinvestingsummit.com, and I'll see you there. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.